Oh yeah, folks, we're here. It's gonna be a little different for you. Quality's a little slightly different. We're going with the remote edition, okay? Away from home, but we don't stop. We don't stop to work when we're away from home. That's the thing about this. Um, Shopify. Let's talk about these earnings, okay? Stock. I'm not gonna say I can assume what happened in these earnings because frankly, the way that the market's been treating earnings so far, I mean, Apple, highway robbery, Microsoft, highway robbery. They're just saying, screw you. We don't care how fantastic these earning smashers are. You're losing. Spotify is a stock I expected a lot out of. Really expected some good numbers. And I still think they might have put up good numbers. The stock was actually up in pre-market trading, so you got to consider that. But now it's taking a turn for the worse, baby. Taking a turn for the worse. And I don't think that's very, very much justified. I think it's a little unfair for us. Let's take a look, though. You look at the stock, and historically, trading up 37% this year, which is very high performance compared to the general market. We've seen pretty big stagnation this year overall. In the last year, up 52%. So not crazy compared to some of the other stocks, but you see they've made up a lot of that when you look year to date. And obviously, performance over the last 5 years has been astronomical. So let's take a peek at these earnings. So, you see here, Shopify put up a non-GAAP EPS line of $2.24. It's a beat by $1.28. And I don't know if this is a typo or what. GAAP EPS of $6.90 beats by $6.80. Gotta be a typo on the part of Seeking Alpha. It's gotta be. I don't believe it. I refuse to believe it. If it isn't, that's the craziest thing I've seen in my life. There's one way to find out, by the way, is if you peek ahead a little bit, but we're not peeking ahead yet. We're not peeking ahead. Subscription, or if you look from a revenue standpoint, quality stuff. $1.11 billion, up 55% year over year. Kind of shocked it was not a larger beat, only by $60 million. I somewhat expected a little bit better numbers there. So if you look at some of the finer details that they'll give you here, subscription services revenue up 70% year over year to $334 million. Due to more merchants joining the platform, more products being sold. Merchant solution revenue was up 52% to $785 million, driven by growth in gross merchandise volume, which again, you see a typo here where they put a random one here. Thank you by Gaure Batavia. You struggled here. Look, that's the thing about you. You were hurrying, and you still haven't edited it. I don't know what's going on. So gross merchandising value, obviously, everything sold on the platform equated to $42.2 billion versus a $40.68 billion consensus, so a nice beat there. Gross payment volume, $20.3 billion versus a $18.89 billion consensus. Great stuff. And monthly recurring revenue, that's $95.1 million compared to $92.3 million. So that's what I would call a nice little beat there. Overall, from a guidance perspective, they expect rapid growth in profit dollars, which it looks like that might be the case. I mean, who knows? Operating expenses accelerating, not a shocker, obviously, mostly just due to an aggressive business growth strategy. I'm not shocked by any means. So they don't really give crazy numbers here, but yeah, higher than anticipated revenue. While incurring lower than anticipated expenses. Curious to see what that looks like, but yeah, fun stuff. So let's get into some of the finer details here. See what we got. So obviously, sale past the consensus mark. We saw that. We saw that CFO update. Nothing crazy. We saw the update. Nothing good there. So that's why we go right to the press release, baby. We don't play around with this fake news. We're going right for it. Words from the CEO. Nothing crazy. Total revenue in the second quarter. Obviously, we saw up 57%. We like looking at that. What else do we got? Monthly recurring revenue. We saw that. Gross profit dollars grew 66% to $620 million. Nothing crazy there. Operating income came in at $139 million, so it's good to see that for sure. Net income line is the one I want to look at here. It was $879 million. Gosh darn. Look at that, $6.90 per share. Compared to a 29 cents per share the year prior. Are they going to explain that? Net income includes, there you go, a $778 million unrealized net gain for on equity investments. So all things considered, I mean, it was still a $100 million quarter compared to a $36 million net income quarter of the year prior. So we're talking about tripling that. I'm not shocked about that. It's pretty nice. So, yeah, that's not bad at all. We'll get into the cash position, obviously, as we get to the balance sheet, which we always do. The virtual partner conference. Don't know if I care about a virtual partner conference. Thank you very much. Shopify Unite. Woo! Just talking about some of the business updates from more flexible, customizable storefronts, faster scalable, more customizable checkout. Try to get people to, follow through with their purchases, and updating their economic model to help scale the partner community so merchants can sell more. We'll see what it's like. Build on the foundation of the fulfillment network, no shocker. But yeah, everything else there is just basic stuff related to stuff they've already announced. I'm not feeling crazy. I'd like a more robust outlook as opposed to what they're giving me, which is just a general, this is this. So I believe I should be able to find, yeah, babe, a balance sheet. Well, let's see what happens when you click zoom in. Well, that's not too beautiful, is it? I don't know. I don't have the hotkey on this thing to zoom in, so we're just going to do the old-fashioned way. Oh, you frick. You frick. Doesn't work that way. I was lied to. I mean, look, that's just being done dirty right there. So we're doing it the old-fashioned way. If they want to do me dirty, we can read from here. I mean, we can. I just wanted to see what it looked like, okay? So total current assets here. Just don't hover over it. That's my tip of the day for you. They're giving me a 6 months comparison. Right now, sitting at $8.4 billion compared to $6.8 billion of 6 months ago. Growth looks like just in marketable securities for the most part. Assets in general coming in at right around $12 billion compared to $7.7. Growth in current assets as well as an equity and other investments line, which obviously we saw there, which is pretty nice. Nice job on their equity investments. So very smart stuff, clearly. Don't know where that came from necessarily on what investment that was that they put in, but hey, it worked out for them. Current liabilities coming in at $511 million compared to $438 million. Not much growth there. And total liabilities in general, not looking bad. $1.3 billion compared to $923 million overall. Assets grew by quite a bit more. You see shareholder equity here rose quite a bit, $10.1 billion compared to $6.4 billion. Massive growth in the last 6 months for this company. And if you look overall in terms of this stock, I mean, it's a hard one to pinpoint. We're talking about revenue of this company really closer to, in my opinion, I mean, it's going to be around $6 billion this year is probably my guess. That would be if they double their business, which I don't know if they will necessarily, but I think there's a chance, but it's probably closer to $4 to $5 billion. And that's a concern because this is a stock trading at a market cap of $186 billion. I think the stock is highly overvalued right now. I don't think anyone can deny that based off of that market cap. And obviously the P ratio being extremely high will fall technically after this, but it's kind of not necessarily accurate due to that equity investment dollars that they were able to get. So that's what I got for you here. I'm not thinking this thing's a buy for me right now. I think it's just traded a little too heavy. Stock price is a little too high. Don't like the market cap right now. That's what I got for you. I hope you have a great day.